call the Assembly Audit Committee to order. It's 2 minutes after 2. Present we have Mr. Trini, Mr. Rivera, and on the phone is Amy Domboski, and the city manager is here. I see that the team from the Assembly's Audit Committee, Mr. Chadwick, Mr. Lee, and we are, as usual, assisted by Rose, who I know from another life when we both had similar responsibilities, in my opinion, has been doing an excellent job. If you agree with me, I appreciate it if you'd tell her so once in a while. And the city clerk, Ms. Jones. All right, who is going to be presenting today from BDO?
Mr. Dyson.
Identify yourself, please, for the record.
I apologize. I'm Tammy Clayton. I'm the controller. With us today is from BDO is Leah Patton, who is the partner, and Sam Thompson, who is the manager on the job.
I understand that this is always an exciting meeting with lots of rambunctious questions. I'll ask my colleagues to constrain themselves. If there are questions, would you prefer to hold them or take them during the presentation?
I actually personally prefer to take the questions during the presentation. I have found that sometimes by the time we get to the end, people forget what the questions were. It's just better to put it in context to the subject matter we're discussing at the time.
And I appreciate that, and I also think it's the most efficient way of doing things. So on. All right, please begin.
So, Tammy, do you want us to just introduce ourselves? Okay. So I'll go ahead and introduce myself, and I'll have Sam kind of give you a brief background of his experience as well. But my name is Leah Patton. I am the assurance partner at BDO's Anchorage office. I'm also the lead partner on your engagement, and here to present the CAFR to you, the results of the audit, essentially. And then I have Sam Thompson here. He's been the manager on your engagement for... Go ahead, Sam.
Hi, so I'm Sam Thompson. I'm the manager on the engagement this year. I think this is my 3rd year serving as manager, but my 7th year working on the engagement from when I first started in public accounting up until now.
So you have a lot of longevity, and I took over from Michelle Drew, who was the previous audit engagement partner, and this is actually my 1st year on the engagement, but last year, since we knew that Michelle was leaving, I was able to assist with the 15 and be part of the technical review team and kind of get myself familiar with the organization. So that's who we are. And so today we have the audit wrap-up presentation. So it's this bound copy in front of you. We'll kind of go over each of the different slides here. Sam and I are just going to kind of tag team together. And so we just want to take a few minutes and say thank you. We definitely want to say an official thank you to Tammy Clayton, your controller division, treasury, public finance, your IT folks, as well as the utility accounting departments. Everyone worked very collaboratively throughout the engagement. We were able to stay on track. I'm sure some of you received some of the weekly updates that Sam sent out just to let you know the status of the audit. With an engagement of this size, it's very important to maintain communications between all the parties involved. For those of you who are new to the audit committee, we just want to take a few minutes, if it's okay with everyone, just to discuss what an audit involves, essentially, and what the audit process is, and the role of those charged with governance, which is the audit committee as well as the full assembly, management, what management's role is, and then, of course, what our role is as auditors of your financial statements. The municipality's annual financial statements, we refer to that as the CAFR, are audited for several reasons. You have, of course, your municipal code, publicly traded general obligation and revenue bonds, and then, of course, there's a federal and state single audit element to it as well. We start the audit process prior to your fiscal year end of December. So we start the process in December, actually, and this is the time that we spend to update your internal control processes. We look at some of your transactions up to that point, such as your disbursements, and then we just do an update of all the current events that happened during the fiscal year. At the end of that, we return in late February, and then we begin testing the year-end balances as they are finalized by management. And then
Excuse me, what does testing mean? Does that mean verify?
Yes.
Okay.
And so from an audit perspective, we do not do 100% testing of all of your transactions. That would be impossible. And so we use a lot of auditor judgments, we use risk assessment, and we use generally accepted auditing processes to come up with materiality to determine which transactions we're going to test and which balances we're going to verify. So some of your material balances would be, obviously your accounts receivable. Revenue is another transaction cycle that we would look at very closely.
Ms. Lee, when you're going to decide what to test, do you look back at areas that were identified in the past as problematic?
We look back at areas in the past, and I don't want to use the word problematic, but if there were certain balances that created risk to the organization, we would definitely look at those. Not every balance that we look at was a problem balance, and certainly we don't want to portray it that way either.
Yep.
But certainly we have certain thresholds that we are required to look at, and then of course upon discussion with management as well as the assembly, we'll look at areas that you consider to be risk areas or you would like for us to look at as well.
Thank you.
We also conducted the federal and state single audits. These audits are specific to your state and federal funded programs. The programs we audit depend on the size, the risk profile, and when it was last audited. So kind of speaks to how we kind of approach the financial statement audit as well. And then we're on site at City Hall, as I'm sure some of your folks already know, all the way up until June. So we're here from February to June.
So it was represented to me that Assembly's audit division helped you.
Yes.
You didn't mention them in the list. I wondered if it was ineffectual or not.
They were terrible to work with, and so we don't want to thank them. No, they were definitely a significant help to the audit process, and we actually, I think, lumped them in with like controller division and treasury in our mind. But yeah, they are definitely great to work with, and in no way, shape, or form was I trying to exclude you. So I apologize. So our goal is to issue our opinion in June. That has always been the goal in the past. However, it is contingent upon some third-party reports that we need to receive. And as I'm sure you're fully aware, we did have to wait on the state of Alaska last year. And so we didn't issue until October last year. And then it kind of happened again this year. We had been told that the PERS reports would be out mid-April. And unfortunately, it wasn't issued until early July. And so we issued the financial statements July 31st, which is the very last date for us to be able to issue and for you to be able to get your certification letter. And so we met that deadline, but it was very tight. It was very close. And so continuing on, I think you should just be aware with the new accounting rules coming through, and then this year we'll be adopting GASB 75?
GASB 74 was done this year, 75 coming year.
So those two things might impact 2017 report issuance as well. And then upon the completion of our audit, we provide the municipality with our independent audit report, which expresses our opinion over the presentation of the balances and in accordance with generally accepted accounting principles. So any questions so far?
I assume either or both of you have done municipal work before.
Yes.
Are we unique in that we have combined what most people would think of as county and city government? And does that make your work different?
I don't think it makes our work different, but I'll let Sam speak to that a little bit more. He's more technical in that sense, but I will say that Alaska as a whole is very unique to the lower 48 and how they handle their municipal governments.
In what sense?
I would agree with Leah that you find there's quite a few communities in Alaska that have what are referred to as city and boroughs. like City and Borough of Sitka, for example. There's really only one city, but it's also a borough, reports as one. The municipality of Anchorage can kind of be thought of in the same way. You have the municipality, but then you have communities such as Girdwood and Eagle River that are still part of the municipality. They're not their own separate cities. I don't believe you find that in the lower 48. You have county governments, and
Yep.
in those states that have boroughs, you have boroughs, but you don't tend to have a mixture of the two. And as far as that adds a layer of complexity to the audit, you have a lot of situations where services that are normally performed by a city government are now being performed by a borough government. And so this puts more on the plate of the actual government in charge as a whole.
But from an audit perspective,
From an audit perspective, I don't think there's a big difference there. Just tends to be more numbers, that's all, but there's no separation there between the two separate governments.
Yeah. Thank you. Please continue.
all right, so if we'll just go ahead and open up the reporting package there in front of you on page 2, I just want to go over some of the highlights of the report itself. So we issued our opinion on the CAFR and single audits, and it was dated July 31st. The financial statements were issued in time, as I mentioned earlier, to receive the GFOA Certificate of Achievement for Excellence in Financial Reporting. To clarify our responsibility as independent auditors, we, as I mentioned earlier in answer to your question, sir, we provide reasonable assurance, not absolute. And so that reasonable assurance is based on materiality, once again. And then management, of course, of the municipality has the ultimate responsibility for the financial statements. So from your perspective, those charged with governance, of course, has the oversight as a whole. Management is responsible for these financial statements. We ask that they represent to us at the end of the audit that all of the books and records were provided to us, that they're not aware of any fraud, they're not aware of any significant or material control deficiencies that were not disclosed to us. There is a litany of things that management has to represent to us at the end of the engagement because they are charged with the financial statements. The responsibility lies with them. And then from our perspective, our responsibility is to provide an audit opinion based on generally accepted auditing standards as well as government auditing standards. And it just requires us to perform that process within those generally accepted guidelines.
Excuse me. In passing, you mentioned some award that was, what was that?
That is the GFOA Certificate of Achievement for Excellence in Financial Reporting. That's what we were trying to ensure that you were able to receive. It's something that you've received every year. And essentially, it's a submission of your CAFR, your financial statements, to this national organization. And they provide a letter certifying that you've met all the requirements.
Right. And do we have how long is our history of receiving that?
I think you're right at 30 years.
29 years, so we applied for our
Right,
30th
right.
year.
That's great. Thank you.
I would add that's quite the achievement. I don't know many municipalities that have been able to keep that streak going.
Yeah, we have very smart people here, most of whom are quite ethical.
Most?
Mike, presently I know more reprobates than you've known your whole life. Thank you. Please continue.
All right, so on page 3 there, the status of our audit, as I mentioned, we did issue the reports. They're reports that we call unmodified reports. So our opinion on the financial statements was unmodified. This is the highest level of assurance that we can provide. There's the unmodified opinion, there's the modified opinion, and then there's the disclaimed opinion. And the unmodified, of course, is the highest level. The modified would be something along the lines of the financial statements were fairly stated except for, and then we would explain what the except for was. And then that's what we call a modified opinion. And then a disclaimed opinion, unfortunately, would be a situation where we came in, tried to apply the processes and procedures, and we're just not able to provide an opinion. That's why it's called a disclaimed opinion. But you received an unmodified opinion. As far as any new significant changes in accounting policies and practices during 2016, I believe GASB 72 was the only one, and GASB 72 required just new footnote disclosures related to the fair value of your investments. And then there were no significant changes to the processes or significant assumptions used to develop your accounting estimates. And we'll talk about what those estimates might be a little bit going forward. And then if you look down to page 4 of the slide, we just want to talk a little bit about the adjusting journal entries. The financial statements that were presented to us were materially correct. However, during our audit process, we did identify a few transactions and we proposed journal entries. I believe 11 was the total that we proposed. 6 were corrected. Sam, you can correct me anytime I say something wrong. 6 were corrected, 5 were passed on, and then we had 3 that were considered clearly trivial and no adjustment was required to be made.
Is this unusual
No.
in government? All right, thank you.
Yeah, no, it's not unusual. Certainly, as I mentioned, we go through a process, and no one is 100% perfect, and that's why you have an audit many
But
times.
Mike comes close, right?
Mike comes very close. I mean, that's why I will say 11 is a great number. 11 is a great number.
Thank you.
And this, I believe the 6 that we did make adjustments to were material, significant enough.
They were significant. Now, to clarify, when we were speaking of adjustments, we summarized all the adjustments for all funds and all entities of the municipality. So this not only covers central accounting at City Hall, but also municipal light and power, the water utility, and the port. So it was full. From our 6 adjustments that we proposed and were then ultimately posted by management, one of them was just reclassification of debt service expense between principal and interest. The other one was to adjust an investment balance related to the Angel Fund to true that up to actual at year end. Another one related to accounts receivable and unearned revenue in the Solid Waste Fund. And then we recorded 2 entries over at the water wastewater utility, and those were to correct variances between their billing software, which is known as CIS, and then the PeopleSoft general ledger accounting software. Over the years, very small variances had accumulated and manifest themselves in 2016 at a larger amount, so it was time to go in and correct those and get the ending revenue and receivable balance at the correct balance going forward. And then the largest entry that was posted was also posted downtown, and it related to a correction of some grant revenue and receivables that were reported incorrectly related to a federal grant award that was never signed and finalized. And those were the 6 entries that were posted.
And those are all listed on page 4. And we'll talk a little bit more about that federal grant award because it did result in a finding.
Yeah. I noticed, I think 3 of the ones you found were within what we call our enterprise utilities. Is that often the pattern with cities?
I think the municipality of Acres is the largest municipality in the whole state. Most communities don't have separate accounting functions for their utilities. It's all done by the overall finance director or controller division. But obviously the size dictates that they have their separate accounting functions. So I don't think it's abnormal in that regard.
I'm not asking if it's abnormal in our state. I'm talking about you guys' national experience.
Historically or nationally? Like, do you mean historically for the municipality, or do you mean across
national.
the country?
Yeah. Is it, would seem to me that those elements of their business vary quite a bit, and they have to deal with contingencies and changing situations, and that they might be more likely to encounter that. But what's your
I would agree with that assumption. This utility accounting by itself has a lot of complex variables, and there's a lot of volume of transactions just by the nature of those businesses, so that increases the likelihood that they would need to have adjustments.
Yeah, I assume so. Thank you.
Yeah. Mm-hmm. And then page 5 is the list of the proposed and adjusted corrected disclosures to the CAFR. So we just found some 3 footnotes that just needed some minor adjustments. The We needed to correct the fair value measurement disclosures in the cash and investments footnote. We worked with Treasury to kind of get the right numbers there. We had to reduce the net OPEB asset in the governmental activity statement of net position. And then we had to remove the unamortized premiums from the current portion of long-term obligations. So these were some adjustments that we made to the footnotes to ensure that the footnotes were fairly stated, but certainly not, significant in any shape or form. And then, as I mentioned earlier, there were 5 uncorrected, which means not recorded journal entries. And I just want to go through these in detail here. But first and foremost, we do want to say that the 5 uncorrected journal entries were not material to your financial statements. They did not impact the opinion over the financial statements. So they didn't impact whether or not your financial statements were fairly stated. And so many of these entries, the reason why we passed on them is because of the timing of when those invoices or that information came in. They weren't material enough for your management team to reopen the books and try to capture the transactions. So the first one is to accrue invoices received after year end for the water utility fund. Another one to accrue invoices received after year end in the wastewater utility fund. And then accrue invoices for year end capital projects related to the road and drainage fund. And then adjust the current year capital contributions and opening net position for capital contributions related to fiscal year 2015 Port Enterprise Fund. So that information came in a little bit late. It actually impacted 2015. We ran the transactions through 2016. They weren't significant enough to try to restate 15 numbers. And then to accrue the court judgment against MOA settlement that was received subsequent to year end in the general fund regarding Kennedy versus the municipality. So once again, all 5 of these just didn't warrant, they weren't material enough for your management team to reopen the books and try to capture these. So 4 of these will go through 2017 transactions.
Excuse me. Mike, can you summarize what the Kennedy case was about?
Yes. Kennedy Feliciano versus the municipality was litigation. It was discrimination litigation filed by 2 police officers against the municipality about 4 or 5 years ago.
Yeah. Thank you. Thank you. Please continue.
Recently resolved.
Out of court?
No.
No, it was court settlement we resolved that.
Court judgment.
It'll be on the 17 CAFR, I think. Be settled 17.
All right. Thank you.
And then moving on to page 7 and 8, we're discussing here financial estimates. So a lot of the numbers on your CAFR or your financial statements are hard and easy numbers. You can trace them right into an invoice or a bank statement. However, there are some numbers in your financial statements where management has to come together and come up with a significant estimate. And it's really based on some complex and subjective judgments. And it's based on the best information that you have at the time that you make these estimates. So the first one, of course, is the collectability of outstanding accounts receivable. Management has to look at some historical collections and come up with what they believe the collection rate is going to be. So your balance at the end of the year might be $100,000 of gross receivables, but based on your history of collections that you'll probably only collect, $75,000 of that. So then you would book an estimate of a $25,000 adjustment against the receivable. We call bad debt allowance.
Excuse me. Mike, on some of our accounts payable, do we get a discount if we pay on time or a penalty if we don't?
There are some payables where that's the case. Robert can answer that.
Exactly right. Yeah.
And on the other end, are some of the receivables we have, is there a penalty if they don't pay us on time?
There is.
There is.
Property taxes is an excellent example of that.
Okay, and what of our accounts receivable are the most difficult to collect?
Criminal fines and fees.
Criminal fines and fees. we might have a number of people who get ambulance rides who,
Yep.
who don't have the ability to pay, so we go after their payment limits.
The city
Yeah,
has
we-
millions of dollars in outstanding balances over many, many years.
Yeah.
And they are of varying degrees of collectability,
Yeah.
from zero to slightly higher than zero.
I would appreciate a general explanation of who those are and the categories. And I don't need very good accuracy.
Okay,
Whatever, you may have something like that internally.
let me find something and get it to you.
Yeah.
This week if I can.
Mr. Trainee?
Mr. Abbott, what happens to the debts that I think ADN owed us before the bankruptcy hearing? Is that just absolved by the bankruptcy court or what?
If we have a claim in any bankruptcy, we pursue that aggressively. And we are, depending on what type of debt the municipality is owned, if it's a tax debt, we have a relatively strong position. But every case is different.
So I remember in their
Every
court
bankruptcy, and there are
filing-
lots of bankruptcies, and many of them include taxes owed.
In the court filing, they said they owed us $56,000, I think. Just want to make sure we pursue that.
We absolutely do.
Thank you,
I
sir.
have a question.
Yes, sir.
On your attempts on recovery on the criminal stuff,
Yes.
are you behind somebody else in the queue? Who gets it? I
in
assume
many-
victims are ahead of you.
Certainly, in many cases we are. Child support. There's a list, but we rise to the. I'm sure there's others behind us, but the state has a number of areas that certainly come victims probably. Child care, child support.
And are you able to go after permanent funds, real property,
Yes.
and personal property?
Yes, and in fact, in our case, we had been for a number of years collecting about $3 million a year off of permanent funds that we would garnish, and as the state cut that number in half, the amount we were able to collect subsequently dropped by about half. So
Do you have the resources, i.e. personnel, to be able to do a good job of that?
I think we do, and we're certainly always looking for ways to do that better. This year, for example, we pursued a behavioral insights program to think about the letters we were writing to people that hadn't paid us for various criminal fines and so forth, traffic tickets and such, which resulted in us collecting more money for the municipality as people realized, oh, I've got this and I really should pay it off, and there will be steps if I don't. But for a lot of our collectible debt, we turn it over to third-party collection agencies.
Skip chasers.
Yeah, okay. And then they pursue it aggressively and,
For
ultimately.
a percentage?
I believe it probably is, yes. And then, ultimately, some of them are just deemed uncollectible, and those
Yeah,
will ultimately
yeah.
show back up when we write those off.
Yeah. All right, thank you. Excuse the interruption,
Oh,
but
no worries. And then we have unbilled revenues. These are accounts receivables that just haven't been billed out yet, and it's just a matter of timing. We have incurred but not reported. This is the self-insurance liabilities, and the estimate is really based on an actuary that's been hired to come up with that number for you. We have the landfill closure liability. The liability is recorded based on third-party closure estimates as well, and then the tonnage used during the year. And then you have some regulatory liabilities that are recorded based on the likelihood of resolution of those regulatory issues, and the estimates are based on management's understanding and the status of the rate cases. We also have the asset retirement obligation, and these are recorded based on projected demobilization costs of the gas field assets, deflated to present value and de-recognized over the remaining life of the field. So these are just kind of some of the estimates that are utilized in the financial statements. And then we've got three more: the environmental remediation liability. That estimate is based on external and management engineering reports and cost analysis. You have the pension and OPEB assets and liabilities, and of course these are the ones that we were waiting on. These are also based on actuarial reports provided by the state of Alaska, and then the deferred credits, and these are to recognize the estimated future costs of road construction and environmental monitoring.
excuse me, and maybe Mike, you can answer this better. What is our outstanding liability on pension accounts? PERS, TERS?
I don't know.
Got an idea of the magnitude of the number?
It's
Two or three
I don't know. It's probably
I
in the
have it
liability
right
study.
I have it in the capper.
Right.
So as of December 31st, 2016, for PERS, the municipality is recognizing a $433 million liability, and then related to the police and fire pension system, another $75 million liability.
And so the TERS one, the teacher one, doesn't show up on our books?
Correct. The teachers would show up on the school district's books.
Yeah, thank you. And I apologize a bit for the interruptions, but this is,
No,
for me,
this
very
is
helpful
good.
information.
This is a good flow of communication here. And then page 10, we'll talk about some transactions. So generally speaking, there's always an accounting rule that we have to follow to record transactions, but you do have one where there's really no authoritative guidance at this time, although I believe a new one has come out. Sam, you want to talk about how that might impact?
So one of the perhaps largest transaction that doesn't have any authoritative guidance that we're aware of is the asset retirement obligation related to the BRU gas field, and it's partially owned by the Municipal Light and Power. And so, in a nutshell, eventually that gas field is going to run out of gas, and the owners of the field are going to have to pay to demobilize that field, and that's going to cost a lot of money. So the accounting rules have said over time that you need to start recognizing those costs while the field is in service. So when the field is no longer in service, you'll have already recognized the cost instead of being hit with some huge 9-figure expense at one point in time. For the most part, owners of natural gas fields and the like are not municipal governments. So GASB, which sets the governmental accounting rules for governments, hasn't come up with an actual accounting rule. However, they did come up with a rule very recently, and it's going to be referred to as GASB 83, Statement 83, and that will not be in effect until year-end 2019. So in the meantime, Municipal Light and Power has been using FASB, or Financial Accounting Standard Board, GAAP, and determining the asset retirement obligation. And we've concurred with their use of the FASB rules up until this point. And they're currently evaluating the new GASB standard to see how it will affect the municipal's books starting in 2019.
Excuse me, Mike. When I sat here many years ago, we bought a gas field.
Yep.
And I understand it's still productive. What's
Right,
the...
and then a year and a half ago, we bought a little bit more of the same field.
Yeah,
So you were involved in the purchase of 1/3 of the Beluga River
Yep.
gas unit. And then in 2016, we purchased with Chugach Electric another third.
Right.
And so the municipality owns a little more than 50% of that field now through ML&P.
yeah. And what's the expert's estimation of the life of those fields?
Proven reserves, I believe, have approximately another 10 years of life at current or anticipated draw rates. There is unproven reserves of potentially another 5 to 10 years beyond that. There's also slightly more speculative liquid assets in this reservoir system or in this unit as well.
Fred?
Mr. Trainee?
Mr. Abbott, I remember something they were saying 2033, what the reserves we have in the gas field. I remember the paperwork coming through.
Yeah, and a lot of that is somewhat speculative in terms of how much money are you willing to invest in the field in order to get those molecules out of the ground. There's a lot of molecules there, but at some point they become economically unviable. It will cost more to produce them than the value of the gas. But if the gas is worth enough, then you can spend more to pull it out. Same thing with the liquids. Right now, at current liquids prices, it doesn't make sense to operate much of an exploration program
That's exactly
in the
right.
unit. But if the market flips and that changes, and experience tells us that will likely happen at some point during the unit's life, then a more aggressive program may be funded.
Yeah, I know a bit about that reservoir, and I think that we have nothing to worry about in
We
in
continue to be
foreseeable.
very satisfied. Robert was very involved in the due diligence associated with that. We're satisfied customers at this point.
And Does the state's regulatory commission set the price at which we buy it, or are we on a contract?
We
Fixed
bought
price.
we bought the asset at a negotiated rate with ConocoPhillips, the owner of the chunk that we
Yep.
purchased. In terms of the transfer price that we pay, that ML&P reimburses itself for buying, quote unquote, its gas back in order to burn it, that is a price that is set based on sort of a basket of Cook Inlet prices, and that pricing methodology has been approved by the RCA.
Right. I just, for the benefit of my colleagues, this is a huge issue 6-7 years ago, and they were literally considering how to build a receiving facility for importing gas. And I always believed the feds and our own oil and gas people that there were 17 to 19 trillion cubic feet there of recoverable gas.
And once the price went up a little bit,
Yep.
people suddenly found it.
Yeah, and editorializing, but in my opinion, that was a regulatory bureaucracy created crisis. And until the price was worth it, no one had ever explored for gas. It was always associated gas. But it's a game changer for us. Mike, one other question. Back in that period, ML&P ran their oil-fired generators to keep the whole grid up during gas shortage, demand times like that. And there wasn't a mechanism then that worked for ML&P to get reimbursed what they did, the favor they did for the other utilities. Do I remember that right?
You may. That has since been rectified.
That's what I wanted to know.
We are able to recover, if we sell power
Yep.
to any other utility, we can recover our costs, even if they are higher than
Yep.
typical costs
Yep.
associated with oil burning.
Yep. Thank you. That's comforting. Excuse me. Ms. Trainee?
I remember the same time period where they were saying that we were running out of gas in Cook Inlet, and after that scare hit, they started exploring out here and found all sorts of gas out there. And there's still more out there they haven't found
Oh,
yet, according to
but
people I've
absolutely,
talked
but
to.
Mike's right, it was a bureaucracy-created crisis, and it was stupid, pardon me, please. Rob, did you want to say something more?
No, sir. Thank you.
So at page 11, we are required under auditing standards to communicate to those charged with governance any significant or unusual transactions. There was one, we alluded to it originally when we talked about some journal entries. I'll let Sam talk about the nitty-gritty details of it.
So the transaction in question was approximately $3 million associated with a federal grant from the Federal Transit Administration that was never actually signed. It was awarded to the municipality and the Anchorage Alaska Railroad Corporation as a joint project. However, the two sides, the municipality and the railroad, weren't able to come to an agreement about how to split those funds, and as a result, the grant award was never actually signed. However, costs were incurred by the municipality and charged to this grant throughout the year and were recorded by Controller Division as expenditures charged to the program, and they also recorded a receivable due from the Federal Transit Administration and revenue recognized related to this project. However, GAAP accounting standards will not allow us to recognize revenue without a signed agreement. Because of that, we had to ask the municipality to go back and remove that receivable and remove those revenues. And again, this is a significant, unusual transaction to have a grant that large go unsigned for such a long period of time. But has been, Tammy has told us that subsequent to year end, and actually very recently, an agreement has been signed, and the paperwork is in process now for those funds to be officially awarded to the municipality.
Excuse me, Mike, was that the federal safety standards, railroads?
No.
The grade, or
No.
on grade crossings and
This
stuff?
is a so-called the 5307 account, which refers to a section of federal law that creates a funding mechanism for communities like Anchorage around the country. In our specific case, we're obliged to share those funds with the railroad and to agree between the two of us on how the funds should be split.
So what's the right tense here, but What is the fund supposed to accomplish?
Well, that's an interesting point, and we don't always agree with the railroad on that point. Generically, the 5307 money is to support public transit functions.
Okay.
But the railroad has, through congressional action, been able to add their capital program to their non-passenger carrying system to the 5307 eligible functions. That's Senator Stevens accomplished
Yep.
that about 18 years ago.
The intermodal?
Yeah, there were a variety of arguments for why that made sense,
Yeah.
but
Okay.
Be that as it may, it's
I
part
got
of the
it.
federal law,
Yep.
and it has created this tension that exists between the railroad
I
and the
got it.
municipality for many years.
All right,
But
thank you.
as our auditors and Tammy alluded, on July 31, we did reach an agreement with the railroad for both
I got it.
FY16 and FY17 funds, so we're clear both for this audit and for the next one. And then we'll fight again in a couple of years.
All right, thank you. Please.
Okay, and then on page 12, this is just the last of the required communications we need to make. So if we had any disagreements with management, if we had come in and the books and records weren't closed or clean and we had to change our audit strategy or we had to exert more effort into certain areas, we would have to disclose that to you. If there were any violations of laws or regulations, we would need to disclose that to you as well. And then if we had to bring in some specialized skills or knowledge from outside of our core engagement team, we would need to discuss that with you. And there was nothing to disclose as far as those are concerned. And we're not aware that management went out to another independent accountant to get second opinions. They weren't opinion shopping that we're aware of because we didn't have any disagreements essentially. The remainder of the slides, page 13 and on, is going to talk about internal controls. We did have over your financial reporting some findings that we have written up, and we'll discuss those findings, but to kind of give you some context, we want to make sure that everyone understands what the different levels of control findings that we write up are what the references are. And so the definition is on page 14 of what the different levels of internal control findings are. And of course, internal controls are really just your processes that you have in place, that management has in place to ensure that any errors related to fraud or whatever.
Most of my colleagues are fairly skillful readers.
Okay, all right. So as far as the three findings are concerned, we have the recognition of capital contributions. That was considered a significant deficiency. So you recorded grant-funded additions to construction work in progress in FY15, but failed to record a related capital contribution until fiscal year 2016. So it's just a timing issue there. And then the accounts receivable, as you know, we had posted those journal entries related to the enterprise funds. So that resulted in a significant deficiency as well over internal controls. And then finally, the accuracy of your schedule of expenditures of federal awards related to the FTA grant. Because you captured those costs on the SEPA, we backed it out. So those were the few findings.
Excuse me. Ms. Dimboski, do you have any questions?
Not at this time. Nope. I'm just following along. Thank you.
Yep.
And then finally on page 16, just kind of give you a big picture, we expressed unmodified opinions over your federal and state awards. So as far as the single audit opinions were concerned, once again, the highest level of assurance. And then we have reported absolutely no federal or state findings. So all you had were the financial statement findings. And then we have some new changes. There are some new accounting rules that are coming up. And Sam, you want to kind of go over those real quick?
Yes. So in 2017, it's not listed on the slide, but in 2017, the municipality is going to have to adopt GASB Accounting Standard 74. And this relates to how the municipality is going to report the plan side of the other post-employment benefits related to the police and fire pension fund. And I've already been in discussion with Members Controller Division, and they're working on doing the analysis and starting to gather the information needed to prepare those disclosures for the end of fiscal year 17. The much larger new accounting standard coming down the road is going to be be in fiscal year 2018, and that's GASB Statement 75, and it's the financial reporting for post-employment benefits other than pensions. So GASB 68 came out in 2015, and that caused the state was late in getting that information, and as a result, the municipality was delayed until October of 2016 in issuing the 2015 financial statements. So the GASB 68 related to just the pension side of PERS. 75 is going to be the other post-employment benefits, i.e. healthcare side of PERS, that will now be reported in the municipality's financial statements as a liability. So I mentioned earlier the approximately $433 million liability that the municipality has on their books for their share of the PERS pension liability. They're going to book another very large 9-figure liability in 2018 related to the unfunded healthcare part of PERS. I don't want to speculate how much that number is going to be. I just know it's going to be large, and it's going to be calculated much in the same way that the PERS pension liability was by actuaries. There's going to be a lot of different assumptions and inputs going into that, and the number will change every year now starting in 2018.
And the remainder of the slides really are just some big picture numbers for you. So we've captured some historical net position numbers and revenue numbers, and certainly in the interest of time, we can just kind of flip through these, and if anybody sees anything that captures their attention, we can talk about it. But I believe there's 6 or 7 slides that capture some of the big numbers, and then some historical numbers to put it in context for you as well. But that kind of brings our presentation to an end, and then we've also included our contact information in case you have any additional follow-up questions for us as well. But if there's any numbers here that you see that you would like to discuss a little bit further, certainly we can. So we started out the slides with your net position as far as equity is concerned, and then we have some slides related to revenues, and then expenditures, and then finally the state and federal granting activity.
Thank you. Any questions from committee members? Comments? All right, please continue.
Well, that's it for our presentation.
All right. Ms. Dembowski, any questions or comments?
Not right now, thank you.
Yeah, so I thank you too. This helped me to learn, which is very valuable. Mike, if I was you all headed into the budget cycle, I would convert some of these figures to real dollars instead of dollars of the day. It looks to me like you all can rightly claim that you've reduced the cost of government, and but those are in dollars of the day, and if they were in real dollars, it would strengthen your case.
Thank you, Mr. Chairman.
Well, you're well capable of figuring those things out, but I would think that would be helpful. Anything else?
Mr. Chairman, I think it's appropriate, and others might remember differently, that we would make a motion recommending acceptance of the CAFR by the full assembly.
Yep.
If that's the case, I
Yep.
would make such a motion.
Yes, that's for sure. Any audience participation? All right. What's the wish of the committee?
I'll make a motion to recommend acceptance of the CAFR by the assembly later this evening.
Second.
I'm not on the committee, so.
Any objection? Seeing none, so ruled. Anything else? Any other business to come before us, Rose? All right. Well done. Are you guys as good as your ads on television?
I think so. Those are now no video.
All right. Well,
That's a requirement, by the way.
I was about to say,
In
you
order
can check
to-
that box on your...
Yeah. All right. Well, we appreciate your service to us.
Well, thank you. We appreciate the relationship, and I just want to say a special thank you to your internal audit firm.
All right.
Very good.